We now want to move to the payments. You had a question on payments as well as payments. You've not yet calculated payments. So that question you are asking in advance, which is okay. How do you calculate payments? Now we want to find out how to calculate first of all the variable overheads. To know how to calculate the variable overheads, you read the information. Go to the question, check information given on variable overheads. And you can see before the table there we have variable overhead is 6 shillings per unit. Variable overheads is 6 shillings per unit. Do you have any other information on variable overheads? Yes, look at note number 2. We read variable overheads are paid in the month that they are incurred. So we'll have a working for variable overheads. Working 2. Variable overheads, and we are calculating variable overheads for the month of September, October, November, December. 4 months. Those are 4 months. You have a column there for months. The month beginning September, October, November, and December. 3 months. We are given the variable cost. So we'll calculate the 6 shillings per unit times the number of units. September we have 180 units. We multiply by 6. In October we have 200 units. We multiply by 6. In November, this is 220 times 6. 220 times 6. That's how to calculate the overheads. 1080, 1200, 1320, 1320. So that is working number 2 for variable overheads. So that's how to calculate variable overheads. 1080, 1200, 1360, 1320, 1320. Fixed overheads, we check information given. Fixed overheads, we read fixed overheads are budgeted at 700,000 per month, which includes 100,000. So we have to deduct the 100,000 from the 700,000 because the 100,000 depreciation is not a cash item. So the fixed overheads is just 600 for each month. It's fixed, constant, 600. We deduct the depreciation because depreciation is a non-cash item. We move on to the wages. How are wages paid? Look at note number 4. Wages are paid 75% during the month in which they are earned and 25% in the following month. So we must do the whole for the wages. Do you see that? I need a working for all the months. Wages are paid 75% during the month in which they are earned and 25% in the following month. Do you see that? And I think Muslima had asked about so we are now working out wages what is the information on wages? Wages are paid 75% during the month in which they are earned and 25% in the following month. And direct labor cost is 10 shillings per unit. 10 shillings per unit. So, wages, this is the direct labor. Just to clarify, Muslim, that's the direct labor. Wages. We read that wages are paid 75% during the month. First of all, we need to calculate the wages. In July, what was the wages? Total wages. Wages in July. So the cost is 10 shillings per unit. How many units are there? Expected to be there in July? 140 times 10. 140 times 10. How much is it? August. 150 times 10. How much? This is just 14. This is 15. September, number of units, 180 times 10. 180 times 10, just 1800. October, number of units, 200. 200 times 10, this is 200. 2 million. November, number of units, 220. We take 220 times 10, we will get 2.2. 2.2. These are 3 zeros. Are they 3? 220 times 10. 2 zeros. 2.2 million. 220 times 10. 2.2 million. So that is the total wages. Then we have the information on wages. That wages are paid 75% during the month in which they are earned. So wages here in the month of July, 1.4 was earned. Then out of this 1.4, 75% was paid during the month. So paid during the month. How much was paid during the month? English language. We are studying in English. 75% times 1400. Then we have 75% times 1500. We have 75% times 1800. 75% times 2 million. 75% times 2.2 million. 75% times 2.2 million. 75% of the amount that was earned was paid. So 1.4 is earned. They were entitled to 1.4, but they are only paid 75% of that. During the month, was paid during the month. So Gilbert says it's 1050. This is 1050. August 1125. September 1350. October 1500. November 1650. 1650 December. That is the amount that was paid during the month, and 25% in the following month. 25% in the following month. That means in the month of July, the 25% was not paid. This is the following month. It was not paid. But the this was not paid because it was to be June, okay? But the 25% of 1400 was paid in the following month, that is August. Do you see that? The remaining amount in July was paid in August. Look at the board. And the wages for August, the total wages for August is 1500. 75% of 1500 is paid in August, but the 25% is paid in September. That is 25% of 1500. We move to September. The 25% of September wages are to be paid in October. Then the 25% of 2000, this 2000 are paid in November. How much? 25% of 2.2 million is paid in December. How much? Ambucha says Abraham says 350. 350. 375. October 450. November 500. December 550. Following month. So what will be the total payment? Total payment. We are going to add during the month plus following month. These two will give us the total. Here the total is 1050. Give me this total. Total August from September 17, 25, October 1950. Total 1950. November 2150. Then lastly December total 2200. That is a direct labor. Working number. This is direct labor. Working number 3. Direct labor or wages. This is working 2. Then we are on working 3. Total wages in September 1050. 1725, 1950, 2150. That's it. These two are irrelevant. Don't waste time there. They are irrelevant. What else do we have? Material cost. Do you have information on material? That will be working number 5. Material cost. What is the cost per unit? Yeah, material costs are paid 2 months in arrears. Wages values. It is 1725, is it not? This is 1725 September, 1725, 1725, October 1950. Then we have November 2150. Then 22. I think that is correct now, Lincoln. Yeah, that is direct labor. But first of all, before arrears, let's just do let's calculate the cost from July, August, September, October, November, December. What is the material cost? What will be the material cost? It is 5 shillings. So it's 140 times 5. Then 150 times 5. Then I have 180 here. 180 times 5. October 200 times 5. November 220 times 5. 220 times 5. Give me the values. 700, 750, 700, 750, 900, 1000, 1100, 1100. So that is the material cost per month. That these amounts are paid 2 months in arrears. That is to mean that this 700 is not paid in July. This 700 is not paid in August. It's paid after 2 months. The July payment is paid in September. So this 700 will come and write here 700. The August material cost is not paid in August. It is not paid in September. It is paid in October. So there you have 750. 2 months in arrears. Then the September material cost is not paid at the end of September. Paid at the beginning of November. This 900. You see that? Then this 1000 October material cost is not paid in October. It's not paid in November. It's paid in December. This 1000. That's the meaning of 2 months in arrears. The payment here. So we plug in the material cost. Plug in the material cost. 700 material cost. 700. 750 for October, 900 for November, then 1000 December. Material cost. Another payment is a tax. What information do you have on tax? Give me the question. What information do you have on tax? When was tax? When is tax to be paid? Not number. Tax. Number 6. Tax liability of 1.4 to be settled in the month of October 2024. October 1.4 million. New van, when was the new van bought? When was the new van bought? Note number 7, a new van will be purchased in the month of September. A new van will be purchased in the month of September, 2 million. New van, 2 million, September, 2 million. So that's information that we have. So we now do the balancing. What's the total receipts in September? Total cash receipt, not received but receipt. These amounts have not been, these are budget, they will be received. Someone says 70, 40. That true? 6105. So this is total payments. 6105. That represents the total payments. So we come here and write total payments. Total. It's a column for total, row for total payments. So we are going to deduct the total payments in September, these total payments, from the total receipts. That will give us a balance carried down. Balance carried down. September. You see, the company expects to receive 7.04 million. It expects to pay 6.105 million. The difference is the balance at the end of this month. How much is it? Lincoln says 935. So this balance 935 at the end of September becomes balance brought down. It's balance brought down at the beginning of October. 935. So we do the addition again. What's the total receipts for the month of October? Total receipts. Get the balance at the beginning, then add the receipts, give me the total October. Abraham says 77, 75. 77, 75. What's the total receipts? Total payments, October. 4145, 4145. So deduct the total payments from the total receipts for the month of October. Give me the balance carried down at the end of October. The difference is the balance at the end of October, which becomes the balance brought down during the month of November. What's the difference? 1950. Abraham, 1950. 1950. It is 1950. So what's the balance at the end of October? 59, not 41. This is 59. So give me the correct balance. So if this is 1875, then it becomes the balance brought down in November, 1875. What's the total receipts in October? 97.55. Total receipts November. Total receipts November. 49.70. What is the balance carried down? 49.70 deduct from 97.55. 85. Which is which? 47.85. Which one is the right figure? Give me the balance. Let me be specific. Cash balance. This is cash balance carried down. November, how much? Payments 49.70. This is now called PE. We call it sometimes PE. 49.70. Balance is 47.85. 47.85 the balance. Cash balance at the end becomes the cash balance at the beginning of December, 47.85. Give me the total cash receipts December. Cash receipts December. 11,985, 51.20. What is the balance at the end? 68.65. 68.65. That's it. You see, it's a very direct question, but it's a bit tricky in terms of even just the dates. So there are students who got confused here at the beginning. And you can imagine wasting 30 minutes, almost the whole paper. Then you begin again, then you are stuck. You are stuck on this concept, cash sales. Because there's information on cash sales. If you don't also get it right, you find you have a problem. So that's why I recommend in the exam, try to first get the dates, do the structure, the dates, the day, the period. Then identify from the question what are the likely receipts. And if you are doing a cash budget for business, receipts, you must have cash sales. Then you will also have money received from debtors. Then you check from the question if there is any other cash receipt. It's just English language. It's English. You are told that there is a motor vehicle that will be sold. When you sell a motor vehicle, you receive money. So you, instead of doing and writing, you just have a structure. Then you come to the payments, analyze the question. What are the payments? You record all the payments. Of course, you need to leave some space because there could be a receipt that you omitted somewhere here. You can skip 2 or 3 lines. Then you come here again and skip 2 or 3 lines. Because you may have missed this new van or tax, so you just come and insert. You understand? Then we mark entries. Cash balance, this is just a free mark. You don't need to calculate this. And in the exam candidate, sometimes you just do the entries. Make these entries, forget about these additions. Forget about these additions. Do the entries first. Make the entries because you could be struggling balancing these things. Maybe you missed this one. So all these balances will be wrong and you've spent a lot of time adding, getting the balances, spent a lot of time. So it is advisable you first just get these marks first. Get these marks. The ones, this one, have these marks. Forget about the balancing. You may have missed something here. Unless you are doing a question that you've done before or you are very sure what you are doing is correct. Don't forget about adding to get the right these marks. Chances are you may have missed some information, and if that's the case, then all these balances will not be correct. These ones, this, and that, plus this, the balances and the totals. First insert. Leave the question like that, move to the next question. to your entries. Then when you have time, maybe you have 30 minutes, you can come back and collect these other marks. That is assuming you've inserted all the right, you input all these variables correctly. So you check the days, identify the receipts, identify the payments, read the questions, read the information not once but 2 times, so that you understand what the examiner is talking about. Wages are paid 75% during the month in which they are earned. You are told here that something was paid in arrears. What was it? It may be in advance. If it is advance, how are you going to do it? If it was to be paid 2 months or 1 month in advance, how do you record it? So that's it for the cash budget. Now the percentage of sales method is a financial forecasting technique that uses sales data to predict future financial performance. And it assumes that certain financial items such as expenses, assets, will change proportionately with changes in sales revenue. As revenues increase, it assumes that certain items will also increase. As sales decrease, it assumes that certain items, assets, expenses, and such will either increase or decrease proportionately. So thank you for attending the lesson. We hope to meet in our next session, where we continue to share knowledge in financial management. So thank you. Let's meet in our next session. Bye bye.